A lot of times stocks are going to decline. I mean, some of my best stocks have gone from 18 to 8, then to sometimes to 40, and some have gone from 18 to 0. On the positive side, information to the public is so much more available today. When a company releases their numbers and they have a call, it's open on the web to everybody.
Right.
All the information. We used to wait for the mail to come to see what Nike's inventories were like. You know, I mean you find out we get in our library in the first class mail. So all this information. So the investing for the average person now is much clearer. They know the same thing as I do.
Yeah.
You don't want to invest in a company whose balance sheet is, they got $8 billion in debt and they have no cash and they're losing money. That's a terrible combination. You get all the information now. So information is a lot better than it was. The key thing is when the stock goes from 10 to 6, if you understand what they do and you know they're financially solvent, you're fine. If you don't understand it, you can call the psychic hotline. But if you don't understand it, you're probably going to do the wrong thing. If you understand exactly what they're doing, it's gone from 10 to 6, you'll buy more. If you're confused to start with, you'll say, well, there must be something wrong there. And then you're out. And then a lot of times stocks are going to decline. I mean, some of my best stocks have gone from 18 to 8, then to sometimes to 40, and some have gone from 18 to 0. But at least I wasn't adding to it on the way to 0. A lot have gone to 0.
So if it's going down, you're not adding to it? I mean, sometimes you are.
If the fundamentals are getting better or the same.
Yeah.
But if they're deteriorating, I'm going to leave. Imagine if you were in a mall the last 30 years.
Yes.
You would have seen The Gap. You would have seen Best Buy. You would have seen Circuit City. You would have seen these companies that are crowded doing something better. And they're buying biotechnology stocks or oil companies. It makes no sense to me. If you're in the steel industry, you see it go from awful to better.
Yeah.
Why don't you buy a steel stock?
What do great managers do?
Well, there's two types. You have Fred Smith who comes up with an idea called Federal Express.
Right.
Then he had to grow it, and that's really tricky. Sometimes people can just do the idea part. He did all the parts.
Right.
And then there's Lee Iacocca had to turn around to trouble with Chrysler. And even more challenging, a giant company like General Electric to make something good better. I mean, that's really hard. So all these people basically were problem solvers, and they had to manage people. And one of the things that surprises people, they don't even understand the definition of management. It's getting things done through others. It's a lot easier to do something yourself. If you have somebody else do it, and lots of people, obviously you're managing people, and sometimes you have to encourage them, sometimes you have to push them a little hard. I mean,
Inspire,
people are different.
motivate,
It's hard.
encourage.
But you have to understand what they want. You have to work with them. You have to explain yourself. You have to set goals. And you have to be a leader yourself, and you have to put a lot of effort into it. And you have to make mistakes. And there's a real amazing difference between being persistent and being stubborn. And I think great leaders can say, this is it.
Persistence is good, stubborn's bad.
Persistence is terrific. Stubbornness is terrible.
But do great managers listen?
Yes, they do. Absolutely.
Can you be greedy in your business?
Yeah, I think sometimes I call it the 3 C's. It's called complacency, concern, and capitulation. Yeah. So you're complacent is the I don't call it greedy. Just everything's going right. You sort of forget to check the facts. You say things are starting to slip in the company. Not the fundamentals. They're starting to mature. There's some competitors coming along. So being complacent is the worst one.
And that's the one that happens most often?
Yeah, well, unless you're working hard. If you're working hard, you're always checking with competitors, you're checking with customers, suppliers. You're trying to do work to find out, is this company still early? Do they have years and years of growth ahead of them? Then you stay with it, no matter, even if the stock goes down.
Also, we're seeing new highs.
Right. I think the market is fairly priced on what's happening right now. You have to say to yourself, is 5 years from now, 10 years from now, corporate profits have grown about 7 or 8% a year. That means they double, including dividends, about every 10 years. Quadruple every 20, go up 8-fold every 40. Yeah. I think that's the kind of numbers you're interested. That's better. A 10-year bond today is a little over 2%. So I think the stock market's the best place to be for the next 10, 20, 30 years. The next 2 years, no idea. I've never known what the next 2 years are going to bring.
What do you want to accomplish in the next year of your life?
Well, I really like to work with my wife and still take some more vacation time.
Yeah.
And
so what do you do on vacation?
Well, we like to see something new. This year we went to Turkey and went to
it's fascinating. Istanbul, but not just Istanbul.
Cappadocia.
Oh, yeah.
Remarkable. Always enjoy seeing it.
Peter Lynch.